Welcome to my channel Commerce with Picasso. Today will be the special class for you all because from today I'm starting the practice paper for those students who are appearing in class 11 Commerce of West Bengal Higher Secondary Educations, their first semester, which has just started from the academic year 24-25. They are having their first semester exam from 13th of September. So we can get lots and lots of English YouTube videos on commerce for CBSE and ICSE. But as regards West Bengal Board of Higher Secondary Education, we mostly find videos on Bengali. And as we know that it is not understood by everyone. So with the help to serve those students who are not well versed with Bengali, I want to help them, and please suggest your friends, your relatives and other schools friends so that they can take advantage of this. So every day I will be uploading a set paper on accountancy and even on other subject. Today I've started with practice set paper 1, and that is a subject accountancy, and it is semester 1 exam. So West Bengal Board of West Bengal, it's not a board. Okay, West Bengal, it's a higher secondary. It's a West Bengal Council of Higher Secondary Education. So I'm starting with the first topic, introduction and theory base of accounting. It doesn't mean that is useful for only the West Bengal board students. It is equally useful to the CBSE or ISC students, but they don't have the semester base, and that's why it is not meant for the exam. That is only the reasons. Okay, but this MCQ based is equally important for all your futures competitive exams also. So all students from various professional backgrounds, it was useful to all the students, not only the West Bengal Council of Higher Secondary Education. Okay, so let's get started with the first questions. So first step of accounting is identifying a transactions, recording a transaction, summarizing a transactions, and none of the above. See, we know that accounting is the process of analyzing, recording, classifying, summarizing of various transactions and reporting to the users. So we record only those transactions which are monetary in nature. We don't record the non-monetary transactions. So first and foremost things, we have to identify the transactions, whether it should be recorded or whether it should not be recorded. So the first step of accounting is identifying our transactions, right? So the right answer is A, that is identifying a transaction. So please get ready with your pen and a paper. So you have to identify the right answer. You have to write the question number 1. The answer is E, as I have not highlighted the right answer because you have to practice later on also. So first step of accounting is identifying a transaction. And what is the last step? See, we'll identify the transactions, we'll record it in the journal and ledger. Then and then comes the preparations of financial statement, that is trial balance, trading account, profit and loss account. Then we have to analyze and interpretation of informations, that is whether it is a profit or loss. We have to identify all these things. And lastly, the financial statement has to the financial statement has to communicate it to the various internal and external users. So the last step of accounting is definitely communications of information. So the accounting starts with identification of transactions and it ends with communications of information to various accounting users. So the for second number answer, for question number 2, the correct answer is C, that is communications of informations. Okay, and let's go to question number 3. credit purchase of furniture recorded in purchase daybook, journal proper and all. See, when you purchase goods on credit, then our entry will be purchase to creditors. But whenever we purchase goods on credit, then it will record it in purchase daybook. Okay, so purchase daybook is a book which is meant for recording credit purchase of goods. So in journal, we record everything, credit, cash, different types of items. And you are seeing a journal proper. So journal proper is a book of, is a special book which records those transactions which are not recorded in any of the other day books. So the credit purchase of assets will be definitely recorded in a journal proper. Okay, whenever you purchase assets on credit, then it will not be recorded in journal or a purchase daybook. It will be recorded mostly in the journal proper. Okay, it will record it mostly in journal proper. So for question number 3, the right answer is C, that is journal proper. Okay, the amount received or receivable by selling assets, goods or services is known as, when you sell something. Okay, when you sell something, say like asset, goods or expenses, the amount received is known as receipts. You cannot call it profit or income. Okay, it is simply the receipts. So the right answer is receipts. Assets which are expected to be converted into cash within 1 year is current asset, tangible assets, intangible assets, and non-current asset. Okay, so there are different types of assets. So there is a tangible, there is intangible, there is non-current asset. So tangible assets are those fixed assets which are not meant for resale. Intangible assets are those fixed assets which are also not meant for resale. Tangible assets have physical existence, whereas intangible assets have no physical existence. And non-current asset simply means a fixed asset. So current assets are those assets which can be converted into cash within a short period of time, that is usually 1 year. So the answer is A. Assets which are expected to be converted into cash within 1 year are current assets. The right answer is current assets. Okay, the right answer is current assets. The other thing is, dash is concerned with ascertaining of total cost and per unit cost of goods or services produced by the enterprise. See, there are different types of accounting. There is financial accounting, there is cost accounting, there is management accounting, there is human resource accounting, different types of accounting, and they have different purposes. But there is special branches of accounting known as cost accounting, which is prepared mostly by manufacturing concern. It is not prepared by the trading concern. It is prepared mostly by manufacturing concerns in order to find out the total cost of the product. Before, if you are not able to find out the total cost of the products, how can you determine selling price? Only after finding the total cost price or cost price per unit, you can charge certain amount of profit to determine the selling price. So the right answer is cost accounting is concerned with ascertainment of total cost and cost per units of goods or services produced by by the enterprise. So the correct answer for question number 6 is C, that is cost accounting. That is cost accounting. Okay. Debit balance of personal account means, debit means which account is debited, balance of personal account means debtors, creditors, incomes, and liabilities. What is meant by personal account? Personal accounts mainly relates with particular persons, it's a place or a thing. Okay, so it's a debtor. Debtors means the persons to whom goods are sold on credit, so it is a debit. Creditors means the persons from whom we have purchased goods on credit, so creditors is a liability, so it is always credit. And debtors is an asset, so it is always debit. Likewise, income is always credited. Likewise, liability is always credited. Okay, so the right answer is A, that is a debtors. So the correct answer of question number 7, debit balance of personal account means it's a debtors. And for question number 8, financial position of a business is determined by financial accounting, cost accounting, management accounting, all of this. See, as I already discussed in previous questions, cost accounting deals with how to find out the cost of product, whereas management accounting is concerned with deriving informations from financial accounting, which is helpful for the management for taking decisions. Okay, financial accounting is mainly preferred for determining the financial position of the business. It is concerned with preparation of trial balance and trading account, profit and loss account, and balance sheet. So financial position of a business is definitely determined by financial accounting. So the right answer for question number 8 is it is financial accounting. For question number 9, stock in trade are to be recorded at cost price or market price, whichever is lower. It is based on which principle? See, stock means those goods which have been purchased but yet not sold. Okay, goods may have been purchased at different price, but you know that stock keeps on fluctuating. Sometimes the price of stock goes up and sometimes the price of stock goes down. So the value of stock may be different on a particular date from the other than the price it has been actually purchased. So at what price it should be recorded? It should be recorded at the price at which it has been purchased, or it should be recorded at the latest current price, market price. So there is a one principle known as conservatism principle or prudence. So conservatism principles uh, assumes that we should not expect future income, but we should expect future losses. So if you're writing it at a market price, you're expecting future income. So that is violating the conservatism prudence. So cost concept assumes that a good should be or stock should record a price at which it has been purchased. Money measurement concept it states that only those items which can be measured in terms of money should be recorded. Likewise, business entity concept, there is a difference in entity between the owner and the business. So the right answer for the stock of goods to record a cost price or market price, whichever is lower, is it is based on which principle? It is based on conservatism principle or prudence. Okay, a concept that a business enterprise will not be sold or liquidated in near future is known as, it is definitely, it's going concern, economic entity, money measurement. So going concern concept is a principle which states that when a business started, it is not meant for um, a short period. It is definitely continued for a longer period of time. It will not be liquidated in a near future. So a concept that a business enterprise will not be sold or liquidated in near future is obviously the going concern concept. The right answer for question number 10 is going concern concept. And other question is, which board of India developed accounting standard? So accounting standard is a principle which helps the accountant to record accounting uh, following some definite principles. Okay, in India, who developed accounting standard? Accounting standard board, all India standard board of India, none of this. So India, the accounting standard is definitely developed by accounting standard boards. So right answer for question number 11 is A, that is Accounting Standard Board of India. It's only the Accounting Standard Board. Okay. See, if you see the question number 12, the book value of all assets is rupees 5 lakhs, book value. So it is book value means the value of the cost of asset minus depreciation. Okay. And it's also known as return on value or depreciated value. And the market value of all asset is 5,50,000. So market value, if you sold all the assets, presently you will get 5,50,000, but it has been sold in the books at rupees 5 lakhs. Okay, your market value is greater than the book value. The business firm reported all the assets in the balance sheet at rupees 5,50,000. That is, the accountant records the asset at its market value in the books of account. Which concept is violated? Cost concept, full disclosure concept, materiality concept, accounting period. It is the violation against cost concept, because according to cost concept, the asset should be recorded at cost price less its depreciation. Okay, so If you record the asset at the market price, then we are violating the cost concept. So the right answer for question number 12 is A, that is a cost concept. Okay. And question number 13. So if you see the question number 13, credit purchase of furniture will record it in purchase daybook, journal proper, or all. See, uh, whenever an asset is purchased, it will record it in journal proper. It is not in a journal. So journal proper is special books wherein we record the credit purchase of asset. In purchase day book, we record only the credit purchase of goods. In journal, we can record credit purchase as well as cash purchase, everything. But proper is a special books wherein the credit purchase of asset is recorded. So the right answer for question number 14 is C, that is journal proper. The account which is credited for purchase, the account is credited for purchase of motor car from Sing Motor is motor car, cash, Sing Motors loan. The account which is debited, not debited, it is credited. So you just try to pass the entries whenever you purchase asset on credit. The entry will be asset account debit to creditor. The name of the asset is motor car and the name of the creditor is Sing Motors. So the right entry for purchase of motor car from Sing Motors will be motor car account debit to Sing Motors Limited. Okay, Sing Motor. So the account to be credited is Sing Motor. So the right answer is question number C, that is Sing Motors. So today I have discussed 15 important questions on uh, first topic, that is introductions and mm, introduction and theory base of accounting. I will come with other important or another 15 questions on my second episode. Okay, till then, goodbye.